Hey guys, welcome to another weekly focus, and this is where I just show you the trade opportunities I had for last week, and then I'll show you the possible opportunities I'll be taking for next week. So if you're new to this page, if you're new to the channel, don't forget to hit that like and subscribe button. And so let's do a quick trade recap and see the opportunities I had for last week. So I was looking at two pairs last week, so my focus was on gold and BTC, and I was looking for selling opportunities and some buying opportunities as well. So I'm going to start with the BTC one, and this was a difficult one to pull out, so it was really difficult for me on BTC last week. So this was on the 26th. So I had this initial sell attempt on BTC, and I took the sell attempt on BTC on the 26th, and it didn't play out properly. Like, it didn't play out the way I really expected it to, and I took a loss on this one. I took a full loss. So it's very rare, like, for me to get this full, like a full hit on a position, because sometimes it's very easy for me to move my stops to break even. But when you look at this position on BTC, this is an example where my read wasn't, my timing, the read wasn't correct, so I was wrong on this. So the timing wasn't perfect, the read as well wasn't that perfect. So I took a full loss on this. I was minus 1% on this one. So once I got in, price didn't even move in my direction. And this is an example of a trade where you know, all right, you really didn't get in like the proper timing and everything, because once I got in on this one, price hovered around my entry point a little bit, and then it moved directly to hit me out, like take me out of this position, and that was a minus 1 on this one. So I tried, so right here I had a minus 1, and I always update like the community just too late, so let them know I took a loss on this one as well, because you have losses, you have wins, you have break evens, and I have to show the losses as well. So I did reattempt the sales on BTC. Once I saw more price action, I reattempted the sales, and I had a break even on this one, and I closed the position. So I closed this position on break even because it was still very difficult for these prices to launch. So once I get in the position, and it takes a lot of time for it to launch, I know it's gonna be a very difficult one. So I closed this, and we was already approaching, say, Friday and stuff like that, heading into the weekend. So I was like, all right, I'm comfortable closing this at break even, and I'll see more price action, and then I'll decide on what to do. So right now BTC seems to be ranging around this point, so I'll have to wait and see more price action, and then I'll decide on what to do. So let's look at gold. So with the gold one, I think we had a couple, so I'll go back to like the 26, 29. Yep, I'll just go back a little bit. Let me see. All right, so on gold as well, so the previous week we had a good position, like 2.45%, but once we started this other week, I did attempt the sales on gold. My initial buyers on gold was to take prices to the upside, but once I saw this momentum coming in for the sellers, I did attempt to sell on gold, and this didn't go well. So I had this hit on gold. So the same time when I was taking like the hit on BTC, which was like a minus 1, I closed this positions on gold because it wasn't moving in my favor, so I didn't take a full loss on this one compared to the BTC one. So once I got in, it didn't launch, and price was reversing, so towards my stop loss. So I closed this one as well. This was like minus almost 0.8%, and I didn't edit this correctly, so I have minus 1 here. But once I got in on the sales on gold, and the sales weren't performing, and price was not moving in my direction, I closed this position, and then I reattempted the buys, which was the initial this was the initial bias I had on gold, and this didn't work properly as well, because I think I crashed on this, and I took, yeah, so I tried the buys on gold. It didn't launch as well, so I closed this at 0.5%, like minus 0.5%, and then I reattempted the sales again, and let me see, I closed this one at a break even because it didn't launch properly. I reattempted the sales again, and this time the sales started moving in my direction, so I moved my stop loss to break even, and then I secured 0.9% on this position. So eventually the trade closed with, say, some profit secured of like 0.97%. So it wasn't like the best week for me because I had a full hit on BTC. I had a couple attempts on gold, which was very difficult for me to get in, and for my most favorable pairs, which is like the indices and all of that, I didn't even touch those ones, and that, like, I had some massive moves on those indices, but I didn't really have a good setup for those. So that's it for the trade recap, and it wasn't like the best week for me. So it's like just moving back to break even on gold, but a full hit on BTC. So as usual, we have to look at the DXY again just to have an understanding of what price is doing and to see what is most likely going to happen next week. So again, there's something I teach called the bird's eye view, and I explain this to everybody I'm working with. When you have the opportunity to look at price from, say, different time frames or from multiple time frames, it gives you a better understanding as to what price is currently doing and what price is most likely going to do. So let's do the DXY first, and I'll start with the daily time frame real quick. So this is the 8-hour time frame. I'll do the daily right here. So we have the DXY on the daily time frame. So when we look at this, and I've been talking about this for like ever since we started doing this market focus, there are just two things I use when I'm doing like my analysis, like the basis or the foundation to my analysis. It has to do with the psychological numbers, and it has to do with trend lines. So right now I'm just going to focus on these psychological numbers right here. And last week we was looking at this move to the downside and a possible move to test an area like this. So staying on the daily time frame, I'm just going to zoom in. So we have this. Staying on the daily time frame, I'll show you two things that's happening on the daily time frame that's of prime importance to me. The first one is this piece of price action right here, where you see some sort of a consolidation. And if you see what happened, we had a massive move to the upside. We had price testing this psychological number of 106. Price went through and then it came back. And with the way psychological numbers work, if I have a psych number here and I have price testing this, I like seeing a test of it again, just to tell me it's difficult for the buyers to go past this point. So there's a high possibility sellers are going to come in. So we had this area right here. We had the move to the downside, a test on this inability to make new highs. So if you see like where prices are, like the current price action right now, you've had prices moving to 105. You had a rejection from the sellers, you had buyers attempting again, and then you had a massive rejection again from the sellers. So when you compare this piece of price action here to this one, it's just a similar move, and price keeps repeating these things. And this is something I've been looking at for a very long time now. So this is the basis to all my analysis, and it's something I've been using, say, over the years. So I have this confidence when I see this printing on the charts, because I've been looking at it over and over again. So just staying on the daily time frame, and if I'm to use just the psychological numbers, buyers took prices to 105, sellers rejected at that point. You had buyers reattempting 105, and then sellers took prices again to the downside. Now because there's this rejection at this point, and once you have a rejection at one psychological number, there's a high possibility price tends to navigate or gravitate towards the next psychological number. So if we're going off of this principle and there's a rejection around 105 from the sellers, then there's a high possibility the sellers will try to take prices to 104, which is the next psychological number, looking at it from the daily time frame. Now once we start moving to lower time frames, we're looking for like confirmations and other possible explanations, or we're just trying to piece everything together. So on the daily time frame, we have this rejection at 105, and we're expecting prices to drop down to say 104. But once we start moving to lower time frames, we'll see if there's a possibility for the sellers to take prices to 104, or if there's just a possibility to take it to an area like this. So it just depends on the price action that we see on lower time frames. So once we step down to say the 8-hour time frame, we see the same thing. We see we see the buyers struggling. So you can as well compare the moves from the buyers and the sellers just to give you an understanding as to what price is actually doing. So if you see the move from here to this point of 105, it's in a very corrective manner. So you had many candles taking prices to the upside, and you just had a couple of candles taking prices to the downside as well. Now you look at this one right here, you've had 1, 2, 3, 4 candles taking prices to the upside, and then you have one massive sell candle taking prices to the downside. Now you have another 1, 2 candles taking prices to the upside, you have one massive sell candle. So it's just telling you, when you look at it in terms of the volume that is being traded, you look at it in terms of the pressure, there's a high possibility that sellers still want to take prices to the downside. So when you look at this price action right here, knowing what is happening on the daily time frame, we have a rejection at 105, which is that inability for the buyers to take prices to the upside, and we see sellers coming in impulsively. We can then step down again to say a lower time frame like the 4-hour time frame. But if you stay on the 8-hour time frame, you see this massive sales coming in, you see this shallow pullback from the buyers, you have massive sales coming in, and we should expect on lower time frames, again say the 4-hour and the hourly time frame, to see some sort of a pullback from the buyers in a shallow form or some corrective nature, and we should then see sellers taking prices again to the downside. So we'll step down to the 4-hour time frame real quick. So on the 4-hour time frame, it just makes it clearer compared to what you're seeing on the 8-hour time frame, and this is a piece of price action I'm focusing on leading into next week. So again, it's very important for you to understand what is happening on, say, the daily time frame, the 8-hour time frame, the 4-hour and the hourly, or let's say the monthly time frame and the weekly time frame even. But if you were to take a trade, say, next week, it's very important as well for you to digest the information you have right in front of you. And the information I have in front of me is like this one right here. So this is a piece of price action I'm most concerned about, this one right here. So what is this telling me? Knowing what is happening from the daily, this area, massive rejection, inability of prices to go higher from the buyers. We have sellers coming in, we have this correction, we have sellers coming in, there is a correction. So this is what I'm looking at, and we need to be very careful here. If you compare this candle to this one, so we had massive sales coming in, we had a correction, we had massive sales coming in as well. But when you look at this candle right here, you have some buying pressure as well. So there's some rejection from the buyers taking prices to the upside. When you compare it to this one, it's kind of different because the sellers dominated during the entire move to the downside. So there is a possibility we might as well see buyers taking prices again to the upside just because of this. And once you move to lower time frames, the hourly time frame, 30 minutes, 15 minutes, you actually see what's happening. But as of now, we can only go with what price is telling us, and what I'm looking at right now is just this pressure coming in from the sellers, and we need to digest this information before we move to the next one. So I'll move to the hourly time frame real quick, and what I'm seeing right here is like a trend that is building up. I use two principles again, I keep repeating this. You have this psychological number of 105, you have the next psychological number which is 104. You have this rejection at 105, there's a high possibility sellers will take prices to 104. Now there might be some difficulty as well for the sellers to take prices to 104, but we should see some selling pressure coming down to test areas like this. And if you find it difficult to go past an area like this, then we could see buyers taking prices again to the upside. So there is a lot that can happen, and that is why we talk about, say, complex structures, because there's some structures that's quite easy for you to read, and there's some structures that's really complex. So we'll move down to the hourly time frame and look at this trend that is building up. So I have this trend line right here, and this is just for like visual representations. You can read price without using this trend line, but let's just go over what price is showing us. We have massive sales from the area of 105. We have this corrective move from the buyers, massive sales again. And when you compare the this sells on the hourly time frame and you compare it to say the 4-hour time frame and say the 8-hour time frame, so you have this rejection which you see on the 4-hour time frame, and you see this rejection as well on the 8-hour time frame, this rejection at this point. But once you step to the hourly time frame, like, you can't really see it, so all you still see is massive sells and then buyers coming in impulsively. So the only difference once you step onto the lower time frames like the hourly time frame is you had one massive sell candle and then you've had 1, 2, 3 candles coming to the upside. So there still is possibility that the sellers are still highly involved with this move to the downside. So we'll just stick on the hourly time frame real quick and try to make sense of this. So you look at this piece of price action, sellers coming in, corrective move from the buyers, some sort of a consolidation, you have a break to the downside. We have the same thing that is happening here. We have buyers taking prices to the upside, there is some sort of a consolidation. If we have a break, we should expect prices to test areas like this, and there's a high possibility if we go through this area we could get a test and then we see prices moving all the way to 104. So my primary focus on my primary buyers coming into next week is to see sellers take prices to the downside. So this is my primary focus coming into next week. Now there's another possibility that we might get these sales coming in to an area like this, and because of what we've seen on the 8-hour time frame and the daily time frame, which is that rejection from the buyers, there's a high possibility we might see sellers coming to an area like this, and then you have buyers taking prices to the upside. And because of what is happening on the 8-hour time frame and the daily time frame, there is still a possibility for buyers to just break out at this point, get a pullback, and you see prices going to the upside. So those are the scenarios, those are the possible scenarios we could see coming into next week. But personally, I'm just going to stick with my primary buyers, but I have all these other scenarios in my head. So if price decides to do something different from my primary buyers, which is to see prices step down to an area like this to test this area, and then a possible move to the downside, this is my primary buyers coming into next week. Now if this doesn't happen, I'm already prepared for what might happen coming into next week, which might be a breakout like this, you get a pullback and you see prices moving again to the upside, or you get this breakout and then you get prices giving you this complex consolidation before you see prices moving again to the upside. So to keep it clean and to keep it simple, this is the primary buyers I'm looking at. So now let's see how we can use this and make decisions on other pairs. So the first pair I'm looking at real quick is the US30. Now this is quite simple, I'm not going to waste time on this. We've seen prices coming down, massive move from the sellers. We have this massive move from the sellers, consolidation, a break, consolidation, and now prices moving up. So we had prices consolidating at 38,000, and so we should most likely see prices going up to say 39,000, which is the psychological number right here. So for us to get involved in this position, I'll be waiting for say a pullback. If I can get a good pullback, a decent enough pullback, then we can see prices going to the upside. So I'm expecting buys on this indices. So on US30, I'm expecting buys to 39,000, and it might even go above 39,000 just to test areas like this, and subsequently we could even see prices getting back to 40,000. So going into next week, I'm very much inclined with the buys coming into these indices. We'll look at NAS100 as well. So with NAS100, we're trading between 19,000, which is this psychological number right here, and we're also trading at 18,000. So we had this massive move to the upside, we had this impulsive move from the sellers, we had this correction, and then sellers took prices to the downside. But when you look at this, you can tell, I'm just going to make this bigger. So when you look at this, you can tell price is moving to the downside, is giving you lower lows and lower highs, lower lows and lower highs. But now we've had this impulsive move coming in from the buyers. So there's some sort of a trend that is building up right here, which you can say is being violated already at this point. So this is how I'm going to attack this pair coming into next week. If we find it difficult for prices to make moves again to the downside, or if it keeps ranging around this point like in a corrective nature, and once we have prices breaking to the upside, then I'll be looking for, say, a possible buy, something like this. If I can get a pullback, say here, or get this consolidation, and we should take prices again to this point. So this is what I'm looking at on, say, NAS100. I'm also looking for buys on US30. So it's just going to be a similar thing on the S&P. So with the S&P one, it's even better, because if you look at it closely, similar move, you had sellers, you had a correction, and then you had sellers making lower lows and lower highs. So what you have now in the S&P500 is this bridge to the upside. So if we get a pullback, a decent enough pullback, we should look for buying opportunities on this to test, say, 5300 and make new highs as well. So I'm looking for possibilities where we could be making new highs on these indices. So there's a way, when you look at indices from higher time frames, it has a way it moves. So it's always going to give you this massive corrections, and once you have this massive corrections, you should expect prices making new highs. This is like my go-to setups when it comes with indices. So that's a tip out there for you. But we should expect prices making new highs on the indices coming into next week. So I'm looking at, say, a possibility of, say, 5400. So we could see prices moving all the way to 5400. So somewhere around here coming into next week. So let's just see how the pullbacks come in once we take out this area. So we should see buyers taking prices, say, to 5400. And the last pair I'm just going to look at is gold. So of all the pairs, I think gold is the only one that has price at the point where I think I might be going in for a buy once the market's open. So when you look at the DXY again, my primary bias on the DXY is to take prices to the downside. That is quite easy, simple, easy peasy. So with this piece of information, I'm looking at gold right now, and this is my analysis. So we had this area of 2400, so price bridged 2400. We had this massive sales, and this is what happened. So we had this massive sales holding at this point. We had buyers coming in, and if you make this bigger, I'll just put this right here. And this is very important, because once we had this corrective move, I was expecting, because I tried this sales, I was expecting this sales to take out this area impulsively so we can test 2300, and this wasn't the case. So we had this area taken out, but it was just a shallow breach of that area, and we had buyers reacting again from that point, and right now we've had sellers coming in again to take out this area. But if you look at the way the sellers are taking out the lows, it's very shallow. So what you see is, say, a move like this, a move up, a shallow breach of that area, a move up, a shallow breach of that area. So once you see something like this, it's kind of, say, a range actually. And once you have this piece of price action, you should expect these buyers to take prices again to the upside. So going off of what is happening on the DXY, and going off of the setup we look at in the community, there's actually a setup we're looking at within this piece of price action right here. So there's a setup you can actually look, and it's something I take quite often. So I'm actually looking for buys on gold. So quick heads up, if we come into next week, and we see some kind of a consolidation or an inability for sellers to take prices to the downside, I'll be looking for a possible buy around an area like this. Just have my stops below this point where it's been difficult for prices to move to the downside, and I'm looking at this highs right here. So this is, say, close to a 2.3. So this is almost a 1:3 risk to reward trade, and this is what I'll focus on next week, because gold for me seems to be the only pair which I'll probably want to go in for a buy as early as possible. With US30, I need a pullback to come in before taking the buys. With NAS100, we need some pullbacks as well to take the buys, and with the S&P, we also need these pullbacks to take the buys. But with gold, I have this price at the point where I really like it, if we can get, say, some kind of a consolidation around this point, or a pullback consolidation, inability of prices to make a move again to the downside, then I'm looking for these buying opportunities. So that's it for this week's market focus, guys. And if you find this interesting, don't forget to hit that like and subscribe button, and see you during the next one. Bye for now.